विघ्नेशान मुनी गुरुस स्मरुनी लक्ष्मीस आवाहिले. आम्ही गुंतवणूक शास्त्र शिकण्या हे सत्र आरंभिले. केव्हा स्थावर आणि जंगम कधी कोठे किती गुंतवू. चर्चा मंथन तज्ञ बोध मिळता हे प्रश्नही सोडवू. ठेवी भाग सुवर्ण पोस्ट अथवा रोखे तसे फंडते. वृद्धी भांडवली मिळो कर नको पर्याय हो कोणते. कोठे उत्तम रोखता सुगमता लाभांश वा व्याजही. कोठे गुंतविणे सुरक्षित असे नोंदीस कैसी वही. सन्मार्गे धनसंपदा मिळविणे अत्यंत आवश्यक. पैसा ध्येय नसे म्हणून जपणे जाणीव सामाजिक. ज्ञानाचा उपयोग गुंतवणुकी साठी सदा होऊ दे. हे सारे समजावया सुमती दे आम्हास तू शारदे.
One of the speakers is going to tell you how to save 10 lakh rupees tax. One of the speakers is going to tell you how to save 10 lakh rupees tax. But there is one catch. You have to earn 1 crore first. Then only he'll be able to help you how to save 10 lakhs. Okay, jokes apart. Budget. People were happy, unhappy, mixed reactions. Some people did not like what the lady has given us. आधीच त्रस्त असतात लोक. एक बाई आयुष्यात ऑलरेडी आहे आणि परत दुसऱ्या बाईने आणखी काहीच दिलं नाही, म्हणजे थोडं हसावं असं वाटतं, ते पण नाही झालं लोकांना. आणि मिडल क्लास लोकांना तर खूपच त्रास झाला आहे. आता कोण मिडल क्लास आहेत त्यांनी आपण स्वतः समजावं. तर जोक्स अपार्ट, वी हॅव टू एमिनंट स्पीकर्स टुडे. मिस्टर तारदळकर, हू इज अ मीडिया पर्सनॅलिटी. रोज आठवड्यातनं एकदा तरी ते आजकाल टी व्हीवरती झळकतात आणि ते दिसले की मार्केट वरती जातं, नाही दिसले की त्या दिवशी मार्केट खाली येतं. त्यामुळे वी होप दॅट ही कम्स ऑन ऑल 5 days so that the market is always in green. And then we have CA Akshat Ambe. Both of them are going to talk about the most crucial sector, which is banking and finance. If you see in the last 3 years, 2-3 sectors have not performed at all. One of them is IT, one of them is consumption, one of them is banking finance. आता तुम्ही म्हणाल बँकिंगमध्ये PSU बँक चालल्या आहेत, but if you see the larger banks, private sector have not performed at all. Well, I'm not going to waste much time here. To give you in detail about that particular sector, I will now request Uday sir to please enlighten us first. Please, Uday sir.
Good morning. In spite of cloudy weather and rains, I think a lot of people have turned up. So thank you for coming on Sunday morning. I'm not going to come much in your way and Akshay's way. Akshay has given me some time limit. Akshay, how many minutes? 20-25? Huh? No, he needs a lot of time because let me tell you, the purpose of holding this kind of session was different because with all the channels, YouTube channels and WhatsApp University and Google Baba, everybody knows everything about the budget. So we thought it that post-budget approval of the bill, let us see how it impacts our life, and that's what Mr. Akshat Ambe is going to deliver it today, and his guru Mr. Dere has given him some tips. I understand that's why I think Sujit told some 10 lakhs tax saving scheme or something. So let's see how that shapes up. Coming to, in fact, I wanted to just discuss a few things related to BFSI sector. Insurance sector, not much, but I'll just touch upon something. Overall, the whatever measures government is taking over a period with consistency, how it is impacting the market. And first and foremost, a lot of senior citizens here, there was a lot of discussion about the fixed deposits in the bank, the term deposits. And there was a clear indication from RBI governor post the MPC also, that the gap between the fixed deposits and the loan disbursement, the credit, is actually reducing, and that's a big concern. But again, he also shared some number, like totally we have 65 lakh crores AUM in the mutual fund industry as of last month. But in the last 3 to 4 months, the fixed deposits have actually increased by maybe 3%. So that industry is around 211 lakh crores. So still it is 3 times of the mutual fund industry. And I'm not talking about debt part of that. I'm just talking about overall. So there is a big concern that money is flowing to the capital market, and the big worry is about always the derivative, that is option trades. And in that context, a lot of things were discussed. And apparently some numbers also came from income tax authorities last night, which indicates the number of people paying capital gains, long-term, short-term, and the spread. And the big worry is people actually in the option era, they are actually losing a lot of money, which was again discussed again and again. But we just can't prevent or induce or lure whatever say from this young generation, because if we have 15.5 crore demat account, there are something of 17.5 crore registered on the other betting apps, maybe Dream 11 or whatever you call. So somebody is trying to make the quick bucks. It is the hour of the day. Like this is the era of 2020. Dream, see. So and active. So and when the IPL comes, it again goes up like. In that also, the whatever diverged or what we really talk about, the pleasing aspect is, if you look at some 10, 12 years back, SIP culture was not that much in vogue, thanks to the distributors like Sujit Vaingankar, our Dhruv Patil, our secretaries. That it has real penetration across nation. And of course, still the numbers indicate that 75% of these mutual fund AUMs, the penetration is still larger in Maharashtra, around 41%, New Delhi around 8%, Karnataka 7, Gujarat 6, and West Bengal 5. So that trend still continues, but it's not bad like the likes of Uttar Pradesh, Bihar, the people from there started putting money in the mutual fund industry. So that's a good indicator. So across, if you see something, the number, if you look at 2013, the total SIP in a year were around 13,000 crores. Now we look at some numbers which is 23,000 crore per month. So you can imagine the penetration which is happening. And it's not that everybody is in equity. Even there are smarter people in India, and I'm sure all of us, you sitting here also, you have done that. Many people, either they redeem certain portion of their mutual fund quantum on 3rd June, and they bought something on 4th June, even the equity wise. So retail investor is getting smarter. When the market abruptly goes up, they book profits. When they are convinced that X script has come down by 10-15% for no reason, they buy it also. So that trend continues as far as the gains are concerned. That's the reason. In fact, I think more than long-term capital gain, the short-term capital gain tax also is gaining momentum as far as government's kitty is concerned. Of course, 20% is too high, but I always keep telling my friends like Mr. Lad or Sakru that first you are happy that you earn 100 rupees. That is why you are paying 20 rupees. So no need to get really depressed on that. So that trend continues as far as the market goes. one concern which has global and always also the Indian has been, we are following Fed rates, Fed meetings every day and night, what happens there. Last meeting, Fed was expected to reduce the rates, which didn't happen because suddenly not only the inflation numbers went up, but even the unemployment went up. Post that, whatever commentaries we have had, I think now it is between Mr. Powell and Mr. Das who takes the first step for reduction. And hopefully India should take that charge, I think, and it's likely to happen because the core inflation also has come down. Little bit I want to talk on that inflation aspect here. What has been discussed in RBI or even during the white paper, as we call it, prior to budget when the economic survey came, the inflation rate as far as food is concerned, it is in the region of 9 to 11%, that hovering between that. Whereas the core inflation is below 5. So government was contemplating, or maybe a lot of rumination happened, whether to really get this food inflation out of the definition of inflation index. But in India, with so much concern about the food index, like we want sugar companies' prices to go up, but we don't want sugar price to go up. That's the thing, and government always keeps balancing. So some middle class people, they get angry when there is a tax increase or something. But the reality is that if the sugar prices go up, government gets backlash. Government, in fact, has been inconsistent in terms of, just to talk about sugar industry. The target for, from the environmental perspective also, to touch 20% ethanol in crude. But suddenly in the last Feb, government stopped ethanol production. And it is so vagaries of nature, as we call it. In fact, I'm going to concern one more thing, along with vagaries of nature, the vagaries of government, whichever government. So suddenly government stopped that. Then there was a fear that there may be lesser production of sugar. In fact, this affects everybody in this room. And then the sluggishness, of course, it is basically contradictory. In a way, you want to earn the save forex, and in a way you are stopping that. Now, basically, there seems to be satisfactory sugarcane production. So again, government has allowed to 20%, and that's why we find the government, these sugar factories and gaining momentum, and also the sugar companies. Surprisingly, this is not the season for any of the sugar companies' rates to go up. But this is what has happened in last 2 weeks or so. So again, that ups and downs, whatever policy-wise happened, like we are fully convinced that on 1st Feb, the finance minister puts his or her hand in your pocket and something goes out. But now it is happening often with these policy changes. One glaring example I wanted to just take up about the, and there has been a lot of criticism which has come, even maybe you can call it as a retrogative step. All of you are aware that worth 2 lakh USD foreign remittance is allowed, and suddenly government came up with in this budget to make it to 20%. That is a tax, the amount retained at source when you are remitting money above 7 lakh rupees. Now imagine the students going abroad for studies and for so many things. 7 lakh amount is very small, and what is cumbersome there is whatever amount you remit, 20% you deposit here, and by the time you get that money back, it is almost 16 to 18 months. So there are two things. One is the government doesn't pay any interest on that, and any variation in the currency, who is responsible? And how many, 32 years back, we started reforms, and this is absolutely retrogative effect. And what is worrisome factor is, Akshay will agree, we have comfortable forex reserves, 6.687 billion, and still government is doing to that. If at all there is some concern about Hawala transaction or some taxpayers or non-taxpayers, in fact, Akshay will confirm that they had declared their income between below 10 lakhs and they were remitting 20 lakhs, 25 lakhs abroad. So that prompted government to take this action. But then government can actually look at these things specifically instead of putting really the student community in real fix, and 16 to 18 months is never going to be acceptable number days for you to get a refund. So that's one of the things really giving negative tones. Again, some positive aspects what RBI keeps doing is all of you are aware that UPI has been the world leader in terms of the online payments, and now the government noticed that either the kids or the senior citizens, they are not able to release payment through UPI because they don't understand. So like in capital market, we had that system of a one mobile number can be used for a family. So here again, the UPI payment can be done by a member of the families with the due, whatever you say, kind of risk mitigation. So maybe grandfather will be able to release payment with the help of son or a grandson, and that will facilitate even more payment. Again, behind this, something is that by the year 2025, December, not financial year, RBI has mandated that the check clearance should come down to 25% of the total clearance. That's the target what RBI has. And even this, the new announcement which came up, still you will find there are a lot of PSU banks or cooperative banks, they take a gala time to clear the checks. I have seen that, in fact I have suffered also. Sometimes there is one issue here as far as the PPF is concerned. Now PPF, they don't allow you to make online payment, correct Akshay? Because they have that fear that you may exceed 150 or whatever. But the thing is that, again, I have raised this issue at a finance ministerial level also, that for all saving bank accounts, you get an interest based on your daily balances. But as far as PPF is concerned, you need to have clear balance in your account by 5th of that month. And you'll find a lot of people rushing in the month of April to make payment and take advantage of that tax-free 7.1. But there are great banks in India, they don't just bother to send you a check for clearance. And I have also seen that happening to myself also. So in a way, you don't allow that to happen. And what is the issue calculating interest for PPF on a daily basis? There is no logic at all. But somehow this legacy has continued, and nobody has really paid attention to that. And from that perspective, again, something, especially the senior citizens really lose, because they are the ones who put more money in this kind of deposits. Even the term deposits number what we had, 47% of that term deposits are coming from the senior citizens. So there is something on the agenda now that the fixed deposit insurance for all senior citizens will be for the entire amount instead of that cap of 5 lakhs. So in that context, something really good happening as far as the UPI is concerned, to allowing the bank family members to operate. Again, the clearance of checks, they have mandated that it should happen within some 30 minutes time, that check has to go for clearance. That is what, again, the directions are coming to the commercial banks. So hopefully same day clearance would happen very soon, apparently. And again, in terms of the public repository for lending apps, there have been instances where a lot of people were cheated in terms of giving online loan and that kind of a thing. In fact, RBI Governor Shaktikant has also came up with this gap. Like even today, there are so many apps of banks and NBFCs where you get in principle approval in just 12 minutes or that kind of a thing. Some disbursement happened in 6 to 7 minutes. But if you want to place a fixed deposit, you have to go to the bank, fill a form. Even the likes of good banks, private banks, they got a lot of complex processes if there is a joint name with in your account. So they don't allow you to take FDs online in many cases. So in a way, you are coming out with a innovative products as far as loans are concerned, but which is not happening as far as the fixed deposits are concerned. So that may be one of the reasons why the banks are actually lagging behind as far as fixed deposits generation. So that was another indication given by the bank. So in that context, so like we have T+1 in capital market, T+1 is now going to be compulsory for even the check clearances. That is made pretty clear. Of course, capital market is one step ahead. We are looking for T+0 from 1st April. So hopefully that also will come very soon. And another thing is, how many of you have invested in gold bonds, SGBs? 1, 2, 3, 4. So happy now? You don't know, Dere sir, you don't know you are not invested, but you don't know the reality. Suddenly government came एक औदार्य दाखवलं आणि 5,000 ची ड्युटी कमी केली बजेटमध्ये, बरोबर आहे ना? They reduced it by 5,000 and now they are actually winding up, in the process of winding up. Why it has happened? Prices has gone up, correct? So government is planning to redeem all these schemes very soon. What was the scheme? You were to get 2.5% tax-free interest. And you know how much government actually suffered a loss? This was never a wiser scheme. Whoever was the FM then, I think late Jetli was there. They always thought that let's curb the gold import, one of the measures. But that never happened. Whatever, we hear a lot of stories about smuggling and all. So that never happened. And actually government's liability started going up. 5,000 नी कमी केल्यानंतर काय झालं? तुमचं नुकसान झालं, तुम्हाला माहिती आहे? At the time of redemption, you were supposed to get higher amount. Even on the value of 5,000 came down. So that interest also you lost. So why government has suddenly reduced 5,000? That's the reason. Because government's liability started growing up. As per one number, government spent as much as 28,000 crore extra. See, I don't know why government took such a late decision. In one way, post-corona, all central banks in the world, they started buying gold very heavily. And we see even the gold prices touching 72,000 in this period. RBI was no less. In fact, RBI is much wiser. RBI has increased its gold reserves from US dollar reserves. So they also bought on very high scale. But they didn't realize what was happening here. So they should have actually come with this idea of redemption maybe a couple of years back. But they continued to issue SGBs until whatever month. I think now that is going to stop now. So we always actually thought that government has given us a good kind of this facility. So maybe now the ultimate source could be ETFs for it to invest in golds, because SGBs are going to be no more for whatever reason. Because government actually probably never hedged on that. So parallelly, maybe government could have bought gold then, but the gold prices surged so high that even something between 49,000 to 72,000 is a big gap, and government has to shell out from their pocket. So in that context, government did this.
What will be the redemption price? What is, they have certain price, they quote it.
So
Same price.
same, absolutely, whenever the redemption takes place. Yes, government is going to do. No, they have the option. They had the option.
Sir, in one of my, it is maturing in November. And so whether I should go for redemption, November 24 is maturing in one scheme. After year,
Hardly anything. Why you want to do that? In fact, lot of people were buying these gold bonds with 8% premium from the market. 8% premium they were buying because they naturally came to know about this arbitrage opportunity. So that's what happened. No, it's available. People were buying. That's what I told. 8%. Even that unlisted also you can go and you can go.
So no tax will be after redemption.
No. That's the first thing they said. Now even that interest what you earn, there is no tax. It's just 2.5%. No. In fact, the purpose of this was to basically reduce the gold imports. That was the main purpose. But and a lot of wise people here, they put money in gold as one of the instrument, but it boomerang on the government because of the unprecedented rise in the gold prices. So that actually affected a lot, and it's finally a commercial sense, so it came down. Lastly, I just wanted to give some positives in terms of the investments, what we do, basically in terms of the, what you call, made in India. So made in India had been sort of a matter of ridicule couple of decades back. And then we came about this concept of Atmanirbhar Bharat somewhere during the COVID period. But what has actually happened is really unbelievable in terms of the numbers. So all the PSUs put together for the year of financial year 2024, government got 5 lakh crore as dividend from all the PSUs put together. You can imagine 5 lakh crore. And on the contrary, last 10-12 years, government pumped in almost 3 lakh crore for the recapitalization of banks. Many of the PSU banks, they were in doldrums. So the reverse trend has happened. One is of course defense, but more on banking. I'll just share the numbers in terms of the profitability. State Bank, almost always topper. State Bank made a profit of 67,000 crores for the financial year 2023-24. ONGC 49,000 crores. IOC 41,000 crores. LIC 41,000 crores. Man sitting here. Coal India 37,000 crores. BPCL 27,000 crores. NTPC 20,000 crores. Bank of Baroda 19,000 crores. I'm just taking a round figure. Hindustan Petroleum 16,000 crores. But in all this, if you compare, there has been craze to, I don't want to name the scripts because I'm not supposed to, but they have been craze to buy a lot of PSU stocks. And there are certain PSU stocks where their the total turnover is in the region of 10 to 12,000 crore. And market cap is exceeding 75,000 crore. So we don't know the logic except demand and supply. That is what happens in every market. So we need to be really alert, like when we really get carried away by putting our money in certain PSU stocks. But this is the reality, and we saw also whenever there was a slump in the market, a lot of PSU stocks, they came down by 15-20% in matter of 5 working days. So that's the open, what you can say, example in your front. So you need to be very careful when you really put your money in these banks. Again, some of the banks were in total doldrums. They are also making good profits. Bank of India, 6,500 crores we saw. Maharashtra Bank, 4,000 crores. Maharashtra Bank was on the absolutely, I had written also earlier in my articles, on the verge of total, what you can say, bankruptcy. That kind of numbers they had then. But thanks to whatever changes they adopted, and not only the changes they adopted, the recapitalization happened in the bank, and overall the strategy of the government. So that is the reason I cannot talk about any bank and its future. I'm not allowed. See, there is a general policy which was announced 5 years back. Nothing has happened. They said that all PSU banks, the number came to 12. They wanted to make it 8. So there are 4 banks which were in the supposed to be getting merged with some other bank. But as of now, there is no declaration coming up. And even that 100 days time what PM was talking, I think we have some 20 days left. So I don't know whether some new declaration is coming or not. But what I wanted to say that these so many banks were in doldrum, so they have also come out of the, even UCO Bank, one of the, I think one of the lowest rung, that also has made a profit of something of 3,004 crores, 3,400 crores. So banks gaining, and that's the healthy sign, because any economy, if you are looking for a growth, the banking system has to be absolutely in command to take it forward, and that's how it has happened. Lastly, just one point about the insurance sector. the insurance for everyone is the basic aim of this Vikasit Bharat, what they are talking by 2047. So in that context, like we had some amendments in the capital market where the insurance company, the broking companies, one company was allowed to handle currency as well as commodity and equity. So PMS, everything. So similar things are coming up in the amendment where there may not be a separate company for general insurance and life insurance. Am I right? Barobar hai. So thank you. So that consolidation again is maybe going to be a game changer because more establishment cost is involved when you are putting two companies. So maybe some consolidation could happen with this amendment, whatever comes up. So that will actually reduce the cost, and why it is good for us is, as a policy holders, our premiums may come down, contrary to what Mr. Savarkar was telling some time back. The premium increase is going to happen because of the consolidation of the products, the policies. But as far as cost is concerned, maybe 1.5 years down the line, when this consolidation happens, the insurance companies, the operation cost may come down, like how we have seen for these banks which got merged, the PSU banks I'm talking, and they have started making profit. So on that note, I stop here and hand over to Akshay. Thank you, all of you.
Good morning, everyone. So first of all, thank you PV Bhagwat Investment Guidance Cell of Lokmanya Seva Sangha Parle for giving me this opportunity. My area per se today is to cover the impact of union budget on personal taxation and capital gains. Basically, the union budget was presented by the finance minister in the parliament on the 23rd of July 24. The union budget was passed in the Lok Sabha on 7th of August 24, and it received the presidential assent on the 16th of August, wherein the finance bill was converted into the Finance Act, which is applicable. The first thing that I would like to cover over here is the old scheme, which I believe is going to vanish in the coming years. There have been no changes in the old scheme. The tax rates are the same. For individuals below 60 years of age, up to 2.5 lakhs, there is no tax. From 2.5 to 5 lakhs, it is 5%. 5 to 10, it is 20%. And above 10 lakhs, it is 30%. For resident individuals who are between the age of 60 to 80, up to 3 lakh rupees, there is no tax. From 3 to 5, it is 5%. From 5 to 10, it is 20. From 10, above 10, it is 30%. Resident individuals up to 80 years of age, the total amount of exempt income is 5 lakhs. Above that, from 5 to 10, it is 20%. Above 10, it is 30%. So basically no change. However, in the new scheme, there have been minor changes. What I believe particularly is, they have increased the tax slab from 3 to 6 or 5% to 3 to 7. This in particular must be in order to synchronize the tax slabs with the rebate limit that has been increased from 5 lakhs to 7 lakhs under the new scheme. So under the new scheme in AY 24-25, up to 7 lakhs of income, there was no there was tax which can be taken as a rebate under section 87A. So you need to pay no tax if your income was up to 7 lakhs. However, the tax slab was 3 to 6 and 6 to 9. So maybe the government was in a position to rectify that possible error. That is why up to 3 lakhs there is no tax in AY 25-26. From 3 to 7 they have kept it to 5%. From 7 to 10 it is 10%. 10 to 12. So here is the benchmark. So basically up to 12 lakhs it is 15%. Under the old scheme as well, from 9 to 12 it was 15%. From 12 to 15 lakhs of income, it is 20%, and above 15 lakhs, it is 30%. So, to be on a precise level, I have prepared this chart for us to understand this easily. Under the new scheme, in AY 24-25, if you were earning an income of 20 lakhs, you would be paying 3 lakh rupees as tax. From 0 to 3 it is nil, 3 to 6 at the rate of 5% it comes to 15,000. 6 to 9 it was 30,000, 9 to 12 45, 12 to 15 it is 60, and from 15 to 20 it is 1,50,000 considering the rate of 30%. So the total amount of tax that a person would be paying if he was earning an income of 20 lakhs in AY 24-25 is 3 lakh rupees. As compared to that, if you see the same table in for AY 25-26, from 0 to 3 it is nil, 3 to 7 it is 20,000 at the rate of 5%, 7 to 10 lakhs it is 30, 10 to 12 it is 30 again, 12 to 15 60,000, and 15 to 20 1,50,000 at the rate of 30%. So basically there is no change from the slabs above 12 lakhs. If you see as per the old and the new, it is 60, 60, 150, 150. So you are saving only an amount of 10,000, but this in particular is only to cover up the 87A rebate limit, which was up to 7 lakhs in the new scheme. Apart from that, if you are a salaried employee, there are the few benefits or incentives that have been given in the budget. The first and the foremost is the 16(2) standard deduction. 16(1)(a), sorry. 16(1)(a) standard deduction amount was 50,000, which has now been increased to 75,000. However, this limit is increased only and only if you are opting for the new scheme. So, if you are earning 20 lakhs or more and you are opting in for the new scheme, apart from this 10,000 rupees of benefit, you will also be getting 7,500 as a saving on which is 30% on 25,000. That is the additional amount of standard deduction. So in an all 17,500 total saving, tax saving. The second and the very minuscule increase is in the deduction under section 57(2)(a). This is on the family pension that has been increased from 15,000 to 25,000. This again is available only and only if you are opting in for the new scheme. This limit is obviously subject to the 1/3 limit, as you are aware, which is already in place. So if the total deduction under 57A is exceeding 1/3 of the total family pension, that the maximum deduction that you can claim is the 1/3 of the family pension or 25,000, whichever is less. That is how it is calculated. The third and the additional change that they have brought in is the amount of deduction allowed to an employee. Now, if you were a central government or a state government employee and there was a contribution to the pension scheme under section 80 CCD2, you were allowed to get a 14% deduction. However, in case of non-central government or state government employees, the limit was only 10%. This they have brought in sync with the state government employees. So now both the employees will be getting 14% deduction under 80 CCD2. That too again, if you are opting in for the new tax regime. So basically what they are trying to say is, if you are going in for the new tax regime, we will be providing incentives. Don't stay under the old one, go in for the new scheme. Obviously we are in a position to calculate, and accordingly we can opt in for the new or the old. Being a salaried employee, every year you have the option to opt in to the new or the old one. Obviously, yes sir. Correct sir. Agreed, but then there must be some calculation on their part, sir. So this is so far as the income tax on salaried employees is concerned. Obviously you all are aware that from this current year AY 24-25, the default scheme is the new tax regime. So if you want to opt in for the old tax regime, you will have to intimate to the government. The option to intimate to the government is given in ITR 1 and ITR 2. However, if you are if you are having business income, then you will have to file the form to intimate to the government, and that acknowledgement number has to be inserted in ITR 3 or 4 accordingly. Yeah, this is the benefit for the private sector employee that they have brought in. So earlier the limit of 14% was only for the central government and state government employees. Now that benefit is extended to other employees as well. That is the change. Sir, that you are talking about 80 CCD 1B. That is the NPS that you are talking about. There is a limit of 50,000 in that. This is the employer contribution to the pension fund. This is 80 CCD 2 deduction. Coming to the topic which everyone loves, I believe, being the investment guidance cell, capital gains. 5 major points which I believe are impacting individuals. The first one is the period of holding of the short-term capital gain. Section 242A. Section 242A has been amended, wherein the period of holding has been changed. I have prepared a chart wherein you will be in a position to analyze the change which has been taken place because of the Finance Act 24. The first part, a security other than a unit listed in a recognized stock exchange, a unit of Unit Trust of India, a unit of an equity oriented fund, and a zero coupon bond. What they have done is, the other than a unit which was mentioned in the section has now been removed. So what has happened is, if you had a unit, coming to point number 2, if you had a unit in a recognized stock exchange in India, earlier the period of holding was 36 months, because the first clause said a security other than a unit. So if you were having a security other than a unit that was listed in a stock exchange, the period of holding was 12 months, and now also it is 12 months. But now, because they have removed the word other than a unit, the period of holding for the unit listed in a recognized stock exchange in India has also converted to 12 months. That is the basic change. So point number 1 and 2 are interconnected. The only change that they have made is they have removed the word other than a unit from the section first part, whereby the unit listed in a recognized stock exchange in India has also now to be considered as a short-term capital asset if the holding period is more than 12 months. The third point, unlisted securities or immovable property. There is no change, because earlier also the period was 24 months, now also the period of holding remains 24 months. However, in case of other capital assets, the period of holding was 36 months, which has now been reduced to 24 months. So what is the change? The change is, if you are holding a unit in a unit of stock in a recognized stock exchange in India, the period of holding is changed to 12 months. And if you are holding any other capital asset, the period of holding has changed to 24 months. So there is a reduction of 24 months and 12 months respectively. Yeah. Correct, sir. There are many instances wherein other capital assets are all gold, maybe, yeah, gold can be a commodity, can be a capital asset. I was thinking about a motor car, but then I thought it is a personal effect, so it is not taxable. That is why I went a bit confused. Tenancy rights too, yeah, that way. The next change that they have brought in is the change, the tax on short-term capital gains. So now, if you are holding a capital asset which is an equity share or a unit of equity oriented mutual fund or a unit of a business trust in India, on which STT has been paid on the acquisition and transfer or on transfer of such unit, the amount of tax calculated on such short-term capital gain was 15% until now, until 23rd of July. But if the transfer has been occurred on or after 23rd of July, it comes to 20%. Long-term capital gains. Coming to long-term capital gains, what has happened is they have effectively changed the long-term capital gains rate from 20 to 12.5 is what we generally believe. But here is a table. What has happened is the overall rate has been changed from 20 to 12.5. However, if you are a non-resident, not being a company or a foreign company, then the rate of tax was 10%. This is not for the purpose of equity shares. So I'll bring you to the equity shares rate. The equity shares rate is mentioned in section 112A. What I am talking about here is the 112 section, which is tax on long-term capital gains other than equity shares, precisely. So you must be thinking why 10 is not mentioned and 20 is mentioned. This is 20 is for the other than equity shares. So So 20% rate has been reduced to 12.5. This in particularly is affecting the sale of land and building precisely, wherein the tax has been changed from 20% to 12.5%. However, if you look at section 48, the mode of computation for long-term capital gains in case of any long-term capital asset, what they had said was, if in case of long-term capital gains, other than capital gain arising to a non-resident on transfer of shares or debentures in an Indian company, the income chargeable under the head capital gains was from the full value of consideration, the indexed cost of acquisition and the indexed cost of improvement was to be reduced to arrive at the value of the capital gains. And then that capital gain was taxed at the rate of 20%. Now, with this reduction from 20% to 12.5%, what they are trying to say is, we will be reducing the rate of tax. However, in the mode of computation, we will not be allowing you the indexation benefit. What happens particularly in this is, in case you are having a benefit while calculating the tax with respect to the indexed cost, there was a huge hue and cry wherein people stated that if we were aware that such a provision was going to come, we would have sold it prior to 23rd of July. So this particular aspect was taken into consideration, and the government said that in case if the capital gains arising on sale of long-term capital asset, in case of land and building or both precisely, if the tax under the old regime, not the old regime, if the tax calculated at the rate of 20% with indexed cost was less than the tax calculated at the rate of 12.5% on the normal cost, then that particular excess of tax shall be ignored for the purpose of calculation of capital gain tax. Now, this is a bit confusing, so what I have done is, I have tried to create a sheet wherein I have also taken the impact of section 54. So, if the sale was made before 23rd of July and the property value was say 40 lakh rupees, the property was acquired in the year 10-11 wherein the cost of acquisition was say 3 lakh rupees and the cost of improvement was say 27,360 rupees. What happened prior to 23rd of July was, that value of 3 lakh plus 27,000 was inflated with was indexed precisely with the cost inflation index of the year of purchase and the year of sale, which is 363 and 167. What happened because of that was, the total purchase value or the acquisition and improvement value of 3,27,000 was converted to 7,11,567. Because of that, what happened was, the capital gains that arise as per the old calculation was 32 lakhs, on which you were supposed to pay 20% tax. Now, what they have said is, we will not be allowing you the indexation benefit, because of which the total value remains 3,27,360 and the total value of capital gains becomes 36,72,000. Now, you in particular have to calculate whether 20% of 32 lakhs is beneficial to you or 12.5% of 36 lakhs is beneficial to you, and accordingly that additional tax has been ignored by the government. However, if you look at section 54, what generally people used to do is, rather than paying tax, people used to claim an exemption wherein they used to invest that particular amount into some other residential house property. Here the impact on the investment is, earlier it was possible for you to invest 32 lakhs and claim the exemption, wherein the total amount of capital gains becomes 0, so there was no tax at all. However, due to this removal of indexation, the capital gains amount has been reduced. I mean, the additional tax amount has been ignored by the government. However, no particular change has been brought into section 54, because of which now you will have to additionally invest 3,84,000 in this particular example. So what has happened is, the tax amount has been ignored, but the amount of investment that is to be made by you is to be on a higher side, because the indexation benefit is removed, but not for the purpose of section 54. This is a very important aspect, I felt, that is why I have tabulated in such a manner. So basically section 112, section 48 and section 54, all three run in sync, and you will have to take cognizance of all three while calculating the tax or the amount of investment in case you are purchasing a new house property. Tax in case of long-term capital asset, as you all know, if it is an equity share or a unit of equity-oriented mutual fund on which STT has been paid on acquisition and transfer or on transfer, then the rate was 10% if the transfer occurred before 23rd of July. This has been raised to 12.5% in case the transfer is made on or after 23rd of July 24. Now, a small point here, what I felt was, people usually think that this indexation benefit has been removed, indexation benefit has been removed. So does it also impact the grandfathering clause whereby the 31st January 2018 value was to be considered? I particularly believe that there is no particular mention in the Finance Act pertaining to that particular clause. So indexation benefit has been removed only for the limited purpose of section 112, which does not include calculation of capital gains on equity shares. Capital gains on equity shares is calculated under 112A, wherein there is no mention of removal of grandfathering clause. This is my view. If anyone has any other view, we can discuss it further. Yeah. 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 Coming to that, sir. This is the slide. Yeah. Yeah. So what they have said is, the limit on which tax is not payable has been increased from 1 lakh to 1,25,000 in case of long-term capital gains if it is under 112A. That means under 112A means capital gains on equity shares or units of equity-oriented mutual fund or business unit. This limit has been increased retrospectively from 1st of April. So if you have earned 1,25,000 up to 22nd or 23rd of July, you are safe that 25,000 is not taxable because of this particular amendment. Lastly, I would like to place emphasis on buyback of shares. The buyback of shares, which earlier used to constitute as a capital gain, shall now be constituted as a dividend in the hands of the individual. So in case there is a buyback and the company is paying you some amount, that entire amount which the company pays you will be considered as a dividend. Amendment to section 222F. Section 56. This shall be taxable under the heads income from other sources. Section 1034A. Earlier, such income earned by the shareholder on account of buyback was exempted under section 1034A. This has been omitted now. So there is no exemption in specific. Further, there is no deduction that shall be allowed from such buyback amount that has been received by the shareholder. So what does this mean in particular is, if you have brought a share for say 10 rupees and the company is buying it back for 15, you will be taxed not at the differential 5 but at the entire amount of 15 rupees. This is the section 57 proviso that they have brought in. So as a normal person, we will think, what will happen to that particular 10 rupees that we have invested? There is no mention as such in particular what I studied in the Finance Act, but I believe that will be construed as a capital loss and will be adjusted against any other capital gains that you will be earning under any other asset. Also, considering 57, the next section that has been amended is, consideration received by the shareholder on buyback of shares shall be considered as nil. So, no value will be deducted, as I stated in the example. The entire amount of 15 rupees shall be taxed in the hands of the shareholder. So, I believe this was my presentation for you. I believe whatever changes that have been taken place, I have tried to cover it in full totality. In case there are any other points that you may like to bring in, we are open. Yeah. Correct. Earlier it was exempt, sir. Earlier it was exempt under 1034A. Yes. Now it is taxable as a dividend. That entire amount will be taxed at the rate of no, it will be taxed as a dividend. It will be taking place under in your tax slabs. Yeah, normal tax slabs. Correct. Then you don't give it. Agreed, sir. It all depends on what is the tax slab that you are paying, no, sir. It depends on the tax slab that you are paying. I would request your Mr. Dhere to say a few words on this point. So he had some inputs. Dhere sir, please.
I have intruded on his time. You know, that is, some 10 minutes I wanted. He gave me 15 minutes. So whether I will be able to take up for 15 minutes, 20 minutes, that we shall see in question answer. Basically, my request for coming to the mic was my 2 days conference, yesterday and day before yesterday. It was our WIRC conference, and there were 3 or 4 lectures, which were extremely good from the investor's point of view, and that is why I thought of coming. He has already explained, and that's the intention of the government, to induce taxpayers to go for a new scheme, right? That is fine. Now, as far as the new scheme is concerned, you don't get ATC benefits, ATD benefits, ATG benefits and all that. It was felt that it may have impact on insurance industry in particular. For example, you take LIC of India, HDFC Life, SBI Life and the likes of that. It will be interesting to see how well their revenue from operations for the year 31/3/25 will appear. It will not show the growth as it was shown in earlier years. The growth will be muted, or sometimes they feel that the growth will be, there could be a negative growth as well. Because income tax deduction was considered to be the best luring or sort of advantage or for nudging people to go for LIC, which hardly, as per insurance acts and all that, gave a return of around 5% only. If you just compound it. If insurance you are taking it for the protection of life, then you should really go for whole life policy, which no one advocates. So most of the insurance products are savings products. Now when you go for savings product, if there is a PPF which gives me 7% or 8% tax free, and if insurance is giving me only 5% tax free or 5.5% tax free, then people fear that it may have an impact on insurance industry. The other view is that these insurance companies, LIC Life or LIC or SBI Life, etc., they will become sort of investment companies. They are at the moment also investment companies, but they are investment companies with cheap availability of funds, because they are getting their funds at 4%, 5%, etc. And if they are getting their funds at a cheaper rate, that those cheaper rate funds may no longer be available, and so they may not do well. So whether they do well or they do not do well, that will all depend upon the trends to follow. And 31/3/25 balance sheet of most of the insurance companies will be a must watch. That is because people are expressing views in both ways. Some people say that, well, what does it matter? LIC has got huge funds, SBI Life has got huge funds. So even if the insurance income is not increasing, even if they act as purely as investment company, they might become a company like Tata Investment, where they are holding shares of various companies, and they have no restriction to, just as there are restrictions on mutual funds, there are no restrictions on their investment except those which are put by IRDA. Now, IRDA restrictions on investments are not as rigorous as the investments made by these people. So that is all these insurance companies' stocks, you will have to have a re-rating because of the government's compulsion for new tax regime. That will be an impact that will be seen. Another thing that we have found out from that conference, so far as the investors are concerned, the tools because of this artificial intelligence will increase exponentially in your hands. Say for example, as an investor, if you want to see the qualifications made by the auditors in their audit report, and based on that you want to analyze the stock or take decisions, then all these qualifications made on particular issue will be all available at a click of a second by ChatGPT. This was announced by our president of the Institute of Chartered Accountants of India. It has already been made available to all registered chartered accountant students free of charge. Already been made available. It will also be made available to chartered accountants after a gap of 1 year, that too free of charge. Now just consider the impact of all this on investments. Students are getting free, so what will we say? They can just click the mouse and find out when the same question was repeated for 75 years. In 75 years, how many times this question was repeated? All that, this information will be available to the students at a click of mouse. What are the standard answers which were provided by the institute for all these questions? That would also be available. Now the same thing will also be available to the investors so far as the investment in stock market is concerned. The stock analysis will therefore take a total jump which is unprecedented in matter. And not only that, they are going to combine these all these qualifications into one for all companies. They would also be available in a language in which you understand. Now today if you see the qualifications made by the auditors, people hardly understand. Kale Sahib is laughing, but yes, that's a fact of life. We make the calculations in a very calculated manner, as they say, which will fit into the legal framework or formality, but which common man does not understand. This will now be possible. The view was also expressed that the days of bank and finance companies as premier institutions, will they be over, or will diminish, or will come down to some extent? Two views again, because these things are new. One view is that gone are the days, when banks and financial institutions were always commanding a premium. Even engineers, they would like to become MBAs and they would like to go to the finance field instead of manufacturing or producing anything, because the salary as an engineer was always less than the salary of even a bank clerk. I know and that it has started from that time. I was a bank clerk before becoming a chartered accountant, and that time, employee unions were there, and unions always used to, leaders used to comment that, nowadays girls are looking for bank employees as their husband, BE. BE means bank employees, and BE means not engineers. And it used to be a very good point for we the youngsters then, that be. And from that time onwards, this gap between the real manufacturers, the real producers, and the persons who operate that through finance, that was increasing day by day. That is why a fund manager can draw a remuneration in crores, but an engineer doesn't, or a technocrat doesn't. Now, they say, I mean, the mood of the conference was, this gap and this difference is likely to come down. And therefore, instead of a financing bubble going up and up and up, only in finance field, it will increase, it will go, but it will have an impact on real economy as well. The third thing which I just gathered from that conference is, and which I also find, that while selecting an employee, you always see the IQ of that employee, young lads, etc., how intelligent they are and how useful they will be to the organizations. Hereafter they say that in most of the organizations, not only in India, but also abroad, and that will have an impact on investment market as well. They say intelligentsia, that is that IQ, will be given a go by. And what will be more important will be EQ, that is the emotional quotient. How far a person is emotionally competent to handle the situation. That is why our institute, our president yesterday remarked, they have stopped writing pass. Earlier it used to be, our remarks used to be pass and fail. Now they are not saying pass or fail for the last 2 exams. They have changed it to successful, unsuccessful. Unsuccessful, you may say meaning is the same, but the impact on a mind is different. Because in life you will have to face the situations, some of which are successful and some of which are unsuccessful. Now when such situations arise, what is your capacity and capability to face that situation, and that will determine your entrepreneurial ability, your investment ability, and your ability even in social and other fields. That was also a matter of discussion where Ajay Bagga and various fund managers, there was one Sudhir Walia, he is from Madras, they were discussing, yes, this is bound to happen. Now whether it will happen in 1 year, impossible. But it's a matter of time. In about 4 to 5 years' time also this will happen. This also gives some insight, because that was also discussed, this income tax issue, that nowadays the income tax department knows much more than what you know about your transactions. You may forget your transactions, but income tax does not. And they gave me, and I personally experienced it. I think I had opened some post office account for GPay, because that time I was told that GPay through post office is much better. So I had opened an account, I had forgotten. I had just put 500 rupees, some nominal amount in it. And when I found my AIS this year, I found that 4 rupees was credited as interest, and that is picked up by AIS. And they know much more than what you know. So therefore, they say, to what extent politicians will permit, I don't know. They say, the number of days of black money are going to be over. So if the stamp duty valuation is 5 crores of a property, and if somebody is offering you 6 crores, but mentioning in the stamp duty 5 crores, that 1 crore, how does he deploy, will be known through AI to the government, it will be caught and things like that. It's not even if you just keep it in a cupboard, it will be a waste like, your 2016 demonetization. That you will not do. You will try to convert it. And this trying to convert black money into white will be something which will be known to the governments through AI. Now, will it happen in 1 day, 1 year? No. But at the same time, we all investors should be very, very careful about this aspect. That was another thing which they disclosed, or rather discussed, and it was immediately coming up through their talks. All this talk about retirement planning, which various mutual funds or various consultants, etc., give through one way or the other, is likely to come to an end, and a new rules and new methods of retirement will happen. That will happen because of social structure change. And the social structure change which they are thinking of, which is likely to happen. Say nowadays you know that 15 years to 20 years, one generation. So if I belong to one generation, Tardalkar will belong to one later down the generation, Akshay will be still one down below generation, and things like that. Now our generation thought that property investment is the best investment. Our generation, even if our children are abroad and they don't want the property, we want to give them the property. We want to give them the money. I have come across a case of our own Parla, our own people, I will not disclose the name, where his son tells him that don't send me money, I don't want money. Still, the grandfather wants to send money to the grandson or granddaughter, and they just don't care about it. But then that was the sentiment of our generation. Property was our generation, that my property. However small flat I may be having in Parla, I thought it as a jewel. And I wanted that my son to get it or my daughter to get it. They are no longer interested in your flat. They find it inconvenient. They will come and stay in hotel. And they don't find anything wrong in it. So that interdependence of the social structure in families is likely to change. That is what one of them stated. If that happens, and instead of interdependence, independence is considered to be a better option, that I am independent, I will earn, I will enjoy my life, you earn, you enjoy your life, you don't give me your money. Then the retirement planning from our angle and retirement planning from their angle is likely to undergo a change. There were many issues that they were talking, but I thought that if you have any questions, still 5 minutes are there. Akshay donated much more than I asked for, so 5 minutes are there. If there are any questions, you can ask. And Dr. Girish Ahuja was excellent. He's 77-year-old chartered accountant. He advises clients and he also advises government. And he narrated various issues. We say that the tax law is very complicated, and even in this budget, they have announced that they are going to undertake simplification and all that. The simplification of tax laws will never happen. This will always be an announcement, and this will never happen. This was the opinion of Dr. Girish Ahuja, not my opinion. Girish Ahuja, who consults both the government as well as the. And when he was talking about black money, he was candid enough to say that मेरे बारे में बोल सकते हैं आप कि 100 चूहे खाके अब बिल्ली चली हज, ऐसा बोल सकते हैं. But I am advising government what are the various ways in which we used to dodge the government, and that is further things. Government talks about lateral entries. Lateral entries that we have thought of including people like Sanjeev Sanyal, etc. in office. In last 10 years, only 45 people have been taken through that lateral entry. That was also statistics given. So this lateral entry, changing the bureaucracy, changing the mindset of the government bodies fast, is also a thing of the past. I mean, that's just for the sake of votes and nothing else. That was also an opinion expressed. And so from that angle, I found it very useful. I thought of sharing this with you. Maybe the budget. Whether it is useful, not useful, capital gains, this will all be affecting our day-to-day life. But we should, at the moment, the AIS information comes only once in a year so far as the share transactions are concerned. But they said that the days are not far off when it will be available online. So as soon as you enter into a transaction, the broker records in his books. At the same time, it goes to the income tax site and it is reflected in your accounts as your sale or your purchase. Another thing which I also noticed in one of our clients' case in our own office, in case of senior citizens, many times, अरे उनको तो tax नहीं पड़ता है, so they are least tax people. So he came to file the return and found that there is a turnover of 3 crores of rupees in its sales, purchase of shares and all that. Only 1 minute. So what happened? No, I have not done anything. Then he said, maybe my son must have done it in my name. He had opened a separate bank account through which this transaction took place, and the father never came to know about it. He is a retired person. And not only that, he had entered into the options and future trades also. Now, options and future trades, when you enter, it is treated as business income in your hands. And when it is treated as business income in your hands, you become liable for payment of advance tax. Otherwise, as senior citizens, you are not required to pay any advance tax at all. But if you have got business income, you are required to pay. Well, these were some of the thoughts. Thank you for giving me this time. Where is our 12:30? So you are going to do it. नाही बोलो, विचारत असले प्रश्न विचारा. 12:30 तर वाजले आपले. अरे, that's okay. No, I just snatched some time from Akshay because Akshay wanted to. He was, whatever he was speaking was definitely useful and informative. He has always, And in fact, he curtailed, otherwise he would have explained certain things much more. Okay? Any questions? अरे नाही वेळ नाही राहतो उरला 12:31 झाले. Yeah. Yeah. No tax benefits. No tax benefit. You pay at this rate, no deduction. If you want to give donation to Lokmanya Seva Sangha, you give. But don't get 80G deduction. If you want to claim mediclaim for your family, you do it. Don't do it because you are going to get income tax deduction under section 80D. TC is gone. So you take care of yourself. So your investment decisions should be tax independent. That is the thinking. And again, you don't depend on your son or daughter. They will not depend on you either. So we are independent. Now this independence has benefits, as well as it has lots of liabilities in shortcomings. Interdependence should be the world order, but interdependence is giving way to an independence, and which will probably affect, they say, the social structure in the world. Chal. New tax regime is bound to come. They just want to, do not hurt middle class too much, and so for them, they are just keeping two regimes. ये भी है, वो भी है. ये भी है, वो भी है. आपको जो चाहे वो ले लो. So the resistance from people is not too much. Slowly they want people to forget the deductions and mind your own. Perhaps PPF as a tax-free product might become irrelevant after 4 or 5 years. Today, LIC has, according to me, what I have learned is, become irrelevant. They will be doing well in stock market because they have got huge investments of the past and they will be working on it. So the share may not fall to that extent. But LIC as an institution for securing life and giving something to your children in the event of unfortunate death are over.